Good day, everyone. Welcome to Accounting Expo with Abisola Abeke, your financial accounting teacher. Today, we shall be looking at subsidiary books of accounts, otherwise known as prime book and book of original entry. What is a subsidiary book of accounts? Imagine your diary of daily events, where you keep records of where you have gone to, who you interacted with, and what you did. So also in bookkeeping, which is two types of books of accounts. We have the subsidiary books of accounts and the principal book of accounts. In this video, we shall be looking at the introduction to subsidiary books of accounts. Now, the subsidiary book of accounts is just like a diary, a journal that shows the day-to-day transaction of a business organization without specifying accounts. The subsidiary book of accounts makes it possible for same category of transaction to be recorded in separate books. So, the subsidiary book of accounts, otherwise known as prime book or book of original entry, is the first book of accounts where daily financial transactions are recorded in chronological order, that is, in the order of their occurrence, where they are recorded before they are transferred into the ledger, which happens to be the principal book of accounts as well as the final destination of all business transactions. Now we are going to look at the types of subsidiary books of accounts. We have the purchase day book, the purchase return or return outwards day book, sales day book, and we have the sales return day book or the return inwards day book. We have the cash book and the proper journal. So what is a purchase day book? A purchase day book is a book of original entry that is used to record goods bought on credit basis. By that word good, I mean the goods that the organization bought with the aim of selling, that is their major line of business, and payment of cash was made. It will not be recorded in the purchase day book. So purchase day book is the book of original entry for credit purchases. Now the next one we are looking at is the purchase return day book or the return outwards journal or day book. The purchase return day book is used to record goods that have been bought from supplier on credit basis earlier on, later returned back to them due to defectiveness or it wasn't what they ordered for. So the book of original entry that is used to record goods return, goods that have been bought, that purchase return, goods that have been bought for resale but later returned back to the supplier due to defect or any reason, is recorded first in the purchase return day book or return outwards journal before posting into the ledger. So the next book of original entry we shall be looking at is the sales day book. Sales day book is a subsidiary book of accounts that is used to record goods sold to customers on credit basis only. In essence, goods sold on cash basis are not recorded in the sales day book. Neither is the disposal or the sale of fixed assets recorded in the sales day book. So now, the next one is the sales return day book or return inwards day book or journal. The return inward day book or journal is a prime book of accounts that is used to record goods that have been sold to customers earlier on, which they return back to the organization that they are no longer buying, equally due to defectiveness or it wasn't what they ordered for. that the organization sold to them. So the book of original entry that is used to record such transaction is the sales return daybook or return invoice daybook. Now the cash book. Cash book is both a book of original entry and a principal book of accounts. It serves as the final destination of all cash transactions. It is both a subsidiary book of accounts and the main book where all cash transactions are recorded. So it's both the first place and the final destination of all cash transactions. The next book of original entry, which happens to be the last I shall be explaining in this video, is the proper journal. The proper journal is a book of original entry that is used to record all other transactions that did not fall into the subsidiary book of accounts that I mentioned earlier on. For instance, sale and disposal of fixed assets on credit will be recorded in the proper journal. Opening and closing of entries will equally be recorded in the proper journal, and as well as any other transaction that did not fall into the category I mentioned earlier on. Now, I want to thank you for staying tuned to Abisola Abeke on Accounting Expo till this moment. If you have any question concerning this topic, please write the question in the comment section below. Thank you for your time. God bless you and have a great day. Bye for now.